This changes everything. I'm your host, Steve Van Metre, and thanks for joining me today. And in yesterday's show, we talked about how banks were dumping junk bonds, but that's not the only thing they're trying to unload. And all this selling by the banks has gotten the attention of the government, who's decided to respond. And in today's show, we're going to look at what the government's doing and what their real motivation behind this is. So let's head over to the Wall Street Journal. Well, this is a response that the government has done, is they now are backstopping mortgages above $1 million in high-cost areas. But what is their real motivation? Well, I think you'll be surprised. The maximum size of home mortgage loans eligible for backing by Fannie Mae and Freddie Mac will rise to just over $1 million next year in a few expensive markets, up from just under $971,000. For most parts of the country, loan limits will rise to over $726,000 from a 2022 maximum of just over $647,000. And this increase will make it easier and cheaper for borrowers to purchase one-unit homes, particularly near those limits. Now, that's the story they're giving you, and that's what I want you to first understand, is that Fannie Mae and Freddie Mac, these government organizations, are just coming out and saying, hey, we're raising our limits to help people buy homes. But I want you to understand that is what they want you to believe. That's not the real reason. Let's continue on. The higher limits are also likely to renew a debate about how big of a mortgage is too big to be backed by the government. And if you're not familiar, Fannie and Freddie, they don't make loans. The companies, which have been under government control since 2008, instead buy mortgages from lenders and package them into securities that are sold to investors. Policy changes at the company are important because their role in backstopping roughly half, get that, half of the $13 trillion mortgage market helps determine who gets access to mortgage credit and at what terms. And so as long as a mortgage conforms to whatever standards Fannie or Freddie asks for, they will insure it. Those bonds get packaged, or those loans get packaged in a bond and sold out onto the market. And that's really attractive for investors. And something else that's attractive here is I want to mention we have a sponsor for today's show. Now, many of you were excited about that silver mining company we talked about a couple weeks ago. You may have watched the stock shot straight up since we talked about it. Some of you are asking for another one. Others are saying, hey, I missed out. What do you got? Well, I wasn't going to do this, but another opportunity came across my desk the other day that I want to share with you later in today's show. And I think this is one, if you're interested in the mining sector, that you'll want to add to your portfolio. But stay tuned to the end because we've got to cover this first. Mortgage bankers and real estate agents say the new limits are great and are needed to reflect higher home prices, as Fannie and Freddie's loan limits need to keep pace with home prices to address affordability. And that makes a lot of sense because as prices go higher, you do see it does price out certain markets, because the real issue here is all about the down payment. If you qualify under Fannie and Freddie's rules, you get to put less money down. And if you're in the real estate market, particularly if you're selling real estate, well, that's good news because now it opens the door to more buyers as prices go higher. But not everyone agrees with that. Maybe the loan limit actually exceeding $1 million will get somebody's attention, at least provoke a much needed policy discussion about the government's footprint in the mortgage market, according to a former top FHFA official. And the real reason as we get into this is, why is the government so motivated? Well, now all of a sudden we see headlines like this as home prices slid in September for the third straight month. And surveys show buyer enthusiasm waning as consumer sentiment toward the housing market fell in October to a record low in data going back to 2011. So what does it mean when you hear consumer demand is waning? Well, it means prices are coming down. Remember, supply and demand, we know supply of homes right now is fairly thin compared to historical norms, but as that tends to grow and demand falls, what do you think is likely to happen here? Is prices likely to continue coming down? As the Federal Reserve continues to move interest rates higher, mortgage financing continues to be more expensive and housing becomes less affordable. Given the continuing prospects for a challenging macroeconomic environment, home prices may well continue to weaken. Again, hearing more about home prices coming down. And now let's look at what Bank of America has to say, because the CEO, he agrees. Bank of America CEO predicts 2 years of pain ahead for the housing market. Still, he's concerned that there could be more tough times ahead for the housing market. Mortgage rates have skyrocketed this year due to the Federal Reserve's series of aggressive interest rate hikes that's made it difficult, if not impossible, for many younger Americans to buy a first home. So again, you're hearing demand go down, which means prices also are going to follow. This is becoming a story of prices coming down, and the government is aware of what's coming and is looking to mitigate that as quickly as possible. Further evidence today, mortgage rates fall for the third straight week, but demand, there it is, that word again, still drops further. And even in the Senior Loan Officer Opinion Survey from the Fed, what do we see here? Major net shares of banks reported weaker demand for all real estate loans over the third quarter. So again, we keep hearing demand goes down, demand goes down, demand goes down. And well, how are the banks responding to this? Well, this is what I want you to see from the weekly bank report. We can note that mortgage-backed securities, the banks have been shedding these things like crazy. They've gone from 2.914 trillion down to 2.767 trillion over the last year, which indicates they've dropped about $150 billion worth of mortgage-backed securities. They're unloading them. So why all of a sudden would the government be worried about raising its limits, which likely is only going to apply to high-income borrowers to begin with? Do they need the government assistance? Well, not really, because the rates for government-insured mortgages and the loans they're getting on these properties now are very similar. There's not a big difference. Now, what the difference is the down payment. But that's not what I think is going on here. So I think the government's figured out that the Fed's over-aggressive hiking cycle is going to lead to a recession and at risk put a housing decline in prices, which we saw during the last financial crisis as a possible outcome. And one thing they don't want is the housing market to blow up the banks. So what do? You raise your loan limits and say, hey, good news, we're helping everyone out here. But what will happen during the crisis, and you wait for this, and I'll see if you agree with me or not, they will go back and say, hey, you know what? We're going to retroactively apply these limits to the prior, say, 3 years, and any loan that would have met our qualifications, but because we didn't have these limits back then, but if they would have met them, well, we'll go ahead and insure them anyways. And what I think we're seeing here is the government getting involved in an early stage, protect against a housing meltdown, which they believe is coming. Now, one thing we want to talk about, our show sponsor today, this is what we call an exploration play. And these are very interesting. And what's interesting about them is they usually involve a company who holds a property that's generally surrounded by other producing properties. And they're in the phase of exploring it, and they already know usually that what they're looking for, their resources, is in the ground. What they don't know is how much. And if they find out there's a lot more than they think, and with this company's team, they believe there's a whole lot more, well, in that case, you're setting up the stage for a stock that can skyrocket. So I'd like to introduce you to Prisma Metals on the OTC here in America, symbol PMOMF. Again, that's PMOMF. In Canada on the CSE, it's PRIZ, P-R-I-Z, and there'll be a link in the description below with all that information. They've got a website, prismametals.com, so you can check it out. Again, they are a discovery and exploration company, and they've got a fantastic management team leading them. It's all headed up by Dr. Craig Gibson, the president and CEO. He's got 30 years of exploration experience in Mexico alone. Their consultant geologist, Rafael Gallardo, has got a ton of experience in Mexico. And Dr. Peter McGaugh, co-founder and advisor, 35 years of experience exploring for silver and gold in Mexico. So you've got this who's who team of guys that are really experienced in Mexico, and they're out here again. But what makes the management team unique about Prisma Metals, and in fact, all of the employees of Prisma Metals, not one of them, again, not one of them is taking a salary. There's no salaries being paid. There's a reason why. It's because they believe so heavily in the opportunity here. They've actually invested their own money, which we'll talk about that more here in a moment. But let's look at some of the properties they've got. They'll start out, the first one is Palos Verdes, and this is their silver mine. Now, when you mine for silver, you're going to find gold, and by the same token, if you're mining for gold, you're going to find some silver. But this area, they're focused on silver. They've been doing some drilling. Now, if you're not familiar with what that means, is they're actually have surveyed the land. They're actually getting core samples. They're testing it. They're trying to figure out where all the silver is. See, they know it's there. They just want to know exactly where it's at, and that's what they're doing with this drilling program. But what makes this property really interesting isn't that they already know that silver is there, it's who surrounds that property. And that company is Vizsla Silver, which is a 225 million market cap company surrounding, again, they own the land surrounding this Palos Verde vein. They've got the same geological context, and Vizsla's got a 100 million ounce resource. So this is really cool because Prisma, when they bought this land and came in, they had a really good idea that there was already silver here. Of course, they knew that because they're experts, and they're drilling. Well, it's starting to show exactly what they believed, and indeed, there's silver and gold underground. And here you can see their drill results from 2018 to 2020, which you can go through and find in their latest book that's posted on their website. So they already know that there's silver and gold underground here. Now, what's really cool is they're going to continue to do their drilling here on Palos Verdes and in their other property, which we'll get to more in a moment. And the great news is they've already got the funding for it. So they have the money to continue their drilling program. And that's their focus right now, is to identify where are all the hot zones, where that metal's at under the ground. Let's continue here. So we've got the three of Mexico's most successful explorers with multiple discoveries. They've got two opportunities. They're Palos Verdes, which is a silver mine surrounded by Vizsla Silver, which is a huge company. And then they've got Los Piritos, which we'll get into in a little bit later here. And that's where they think they've got a whole bunch of gold sitting there. And they're in the early stages of discovering and getting ready to do their exploration and their drilling in early next year. But what makes really the Prisma Metals story so unique is the fact that 40% of the stock is owned by the management and advisors. So what you have is all the management and advisors put their own money in the company, and that's why they're not taking a salary here. And I think that's really important. What you have then is the next 40%. These are long-term, large investors. They're not looking to trade their stock. They're holding it because they believe in these guys and what's under that ground. And that leaves about 20% of the float out there. It's about 7 million shares. And so you start to get the opportunity here that that's not a lot of shares that are out floating. If there gets to be a lot of demand and a lot of interest in the stock, the price can go way higher, particularly, and we'll get into this a little bit later, if the setup for gold is it goes higher and mining stocks to go higher. Well, you can see Prisma Metals is poised to really go higher. And my friends, this is an early stage opportunity. As you can see, they haven't even finished their drilling programs. So you're looking at getting in on the ground floor. Let's talk about Vizsla Silver, because this week there was some big news having to do with them and Prisma. Here's the headline: Vizsla Silver to make strategic investment in Prisma Metals and receive right of first refusal on the Palos Verdes concession. So what happened is Prisma came in at 50 cents Canadian and injected $500,000 into Prisma, and get this, gave Prisma 1.5 million of Vizsla shares. So what Vizsla is doing here is stabilizing the share value, which is a really important note as a potential investor. They're putting some stability into Prisma, and if you look at where the shares are trading at on the Canadian exchange, you now know they bought in at 50 cents Canadian. Now, what they did this for, well, it's a pretty obvious reason. They're running the ground all around them, and so if you think that they know that there's probably silver there, well, you got it. And here's what they're after: is a joint technical committee to allow for the pursuit of district scale exploration of the gold district in the area and formation of a joint technical committee. They also, get this, have the first right of refusal to purchase the Palos Verdes project from Prisma. So this is a really big deal. You have effectively the neighbor to this silver mining or silver property says that, hey, they believe so much in what this team is doing that they became an investor and said, look, we're going to help. We're going to put some money. We're going to put some stock in, and we're going to help you guys make this property a winner. And if you're a winner, we're a winner as well. Now let's talk about their other property. That's the Los Piritos. This is located in the Alamos region of southern Sonora, and this is their gold project, and they believe that there's a ton of gold here. And remember, these guys are experts in this, and this is, again, still in the early phase, and they're looking at getting that drilling going early next year. Now, of course, all this matters, and all this is good information, but what about the charts? What do the charts say here? Well, let's head over to the chart program. Again, we're looking here at PMOMF on the OTC in the United States. And what we can see here is this is a young company. They're brand new. So if you're looking for an early stage opportunity, well, you've got it. Now, the first thing that we want to do is see how they compare to other companies in the space. So we're going to look up GDXJ, which is a junior mining ETF. And what we want to see and what we are seeing is they trade in similar fashion, and that is good news. So the next question is, what's going on with the volume? Because really the technicals don't matter a whole lot here because there isn't a lot of time and the company's been around. But what do we notice from volume profile? We see that there was a heavy amount of shares purchased at around 25 cents. You can see here's a supply zone. Prices rallied up since then. This is where the Vizsla deal came in, is right up here, and that's important to understand the Vizsla story. They came in up here. Here we see a supply zone, and this is believed to put some stability, but because they already know that there's silver and gold in the ground, there's some stability and some reduces the downside risk exposure that you might have in the stock. But again, if we make the case here that gold or silver is going to go higher, well, now you've got a big case. And one of those reasons we've talked about in the show recently is the CTAs are somewhat short on gold, looking to trigger higher. That should be happening now today and in the days following. They could start going long. We could see an equity melt up. That would pick up the mining side. We're also seeing a weaker dollar. So if you remember our last story, well, this is a similar case of that. That one went way up. This one is too. At least that's what I think. And as I mentioned in the last two I brought to you, I'm putting my own money in this as well. Under full disclosure, tomorrow, shortly after market open, I'll be making a similar purchase. Hope you'll take a look at it, because what I think is this thing is poised to go a lot higher. And with that, I'm Steve Van Metre. Thanks for watching. Thanks for being fans. Bye now.